David Westin, the host of Wall Street Week, joining us now.
Thank you so much, Katie. Well, ESG, environmental, social, and governance investing, may not be as popular as it once was, or at least not as popular to talk about, as we've seen from some of the most vocal proponents like BlackRock, backing off their support for shareholder ESG at companies that they invest in. Stephen Meier, CIO of the New York City retirement system, oversees some $250 billion in assets and took us through what the shift means and doesn't mean for his investments.
From our perspective, David, it really doesn't impact us that much. I mean, BlackRock is a world-class firm. They're a strategic partner of ours. They're an important part of our investment process. They are our largest single asset manager externally, so they're important to us. But we actually undertake, as a large institutional investor, we vote 100% of our proxies. The proxy voting process is actually part of the assets of the fund, and we have an affirmative obligation to vote those proxies. In terms of shareholder proposals, it's just another means for us to engage with the company. So a lot of our investing, particularly in the U.S., we've got about $70 billion in U.S. equities under management. I'd say almost 80% of those are passively managed. And there's a misconception in the marketplace that passive management means passive ownership. To the contrary, we think passive management really demands active ownership. Not activist, but active ownership, because we intend to be in these indices and these companies for years and decades. So we want to have the ability to impact the performance of those funds in terms of driving long-term value creation over time. So again, we vote 100% of our proxies in-house. I'd say where it's important for us, though, is that BlackRock, it's a big, important firm. A lot of people look at what they do. We'd like to see their support in our shareholder proposals. But we do understand that they've got a number of conflicts out there today. Unfortunately, the whole issue around ESG has become highly politicized. And that's, I think, has something to do with perhaps them, at least on the surface, looking as though they're pulling back from some of those commitments.
Steve, I'm curious about the shareholder initiatives when it comes to ESG, environmental, social governance, and maybe environmental is the one that we talk about the most. I know that's something you take into account in your investing, but can you do that just by looking at what the companies are doing rather than what they say they're doing or what shareholders want them to do? Do those shareholder proposals really factor in at all? Do you support them?
We actually really try to hold our investment portfolio companies accountable for what they've said in the press or what they've agreed to do in terms of pick on environmental, in terms of reducing their carbon footprint, look what their plan is around waste management, water management, efficiency of their processes. So we do hold them accountable. Part of that process and a lot of the shareholder proposals that are out there really focus more on disclosure and transparency around these various issues around the ESG. And when we think about ESG, it's not a social agenda. It's really a matter of risk mitigation and taking advantage of the opportunities that are in the marketplace.
So when it comes to environmental, for example, are you getting the information that you need? As you know, regulators like the SEC have proposals right now about regularizing that information. Are you getting what you need to make informed decisions?
I would say we're well along the way, but we're not quite there yet. There's still a lot more disclosure that we'd like to see. There's a lot more consistency across the various portfolio companies that we invest in that we would like to see achieved. But it's a work in process. I think that, again, a means of engaging with companies, again, through proxies, but more importantly, through the shareholder proposals and a dialogue associated with that, I think is very positive. I'll give you an example. So this past year, we had 34 shareholder proposals. More than half of them were, quote unquote, settled, or we'd reached an agreement with the companies beforehand, so it never even got to a vote. So it is an important way of engaging with our portfolio companies, and we think we're really getting some positive outcomes associated with those engagements.
Steve, I know you have 5 different pension plans that you represent. You've got a lot of workers and retirees that are really depending upon you. Do those 5 independently operated pension plans have a uniform view on the questions of things like ESG?
That's a wonderful question, David. They do not. So we have 5 different public pension plans we manage for police and teachers and firefighters and other government workers in the city of New York. They all have their own unique preferences, risk tolerances, their own views on, say, climate change and sustainability. So we actually have an open mind when we manage the portfolios for the various 5 plans. We really look to execute the will of the trustees, but they are different. So, for example, around proxy voting, each of the plans has within their investment policy statement their own proxy guidelines. We don't vote them in bulk. We vote them specific to each of the funds. So the underlying holdings for each of the 5 plans, they may differ in terms of their position on issues around ESG or any other matter for that case. And we vote them according to those specific preferences of those individual funds.
Steve, you said that from your point of view, this is a risk management issue more than it is a social issue or much less a political issue. On the risk management issue, as you look out, because you're informed about this now as an investor, what is the scenario going forward on the move toward zero carbon emissions? Because we're seeing some companies start to back off some of those early commitments.
Yeah, I think so. I think the issue, it's easy to say what you want to do, and then executing is a little more challenging. So I think that may be some of what's behind what we're seeing in the marketplace today. My belief is, however, that the underlying investment companies that have gone down this path believe that this is the right thing to do, that this is the right way for them to manage their business. They're risk aware. I think that any company that will look through the lens of ESG in terms of the decision making will ultimately have a better outcome, and I think probably a more robust risk management process in place associated with that view. So I don't think there's been necessarily a pullback on the commitments to environmental issues, reducing our carbon footprints, and being focused more on sustainable technologies. But I do think it's more challenging than people expect.